How do you handle the turbulent markets that we're in right now? Right now, there's a lot of volatility, there's a lot of uncertainty. How do you deal with that within your accounts, and how do you communicate to your clients?
How do we handle it? You just have to make the client feel like he's being taken care of. Clients just want to think that they have their money with somebody who knows better than them. Okay, somebody who's leading them to financial success. So communication with your client is key. Stock goes up, stock goes down. Greece is going bankrupt, or Italy's going bankrupt. Whatever, that doesn't really matter. You call your client, you say, listen, yes, this is happening, this and this is happening, but I believe in the next 2 weeks we'll be just fine. A month, 3 months from now will be fine. If it's not working now, you tell your client that we're in a long-term position and it's going to work later. That's all. You tell him whatever, or her, say whatever makes them feel better. Okay? If they feel great, they're not going to A, sue you, or B, leave. Those are the only two things that we really don't want to happen. We don't want clients leaving, and we don't want clients taking you to court. So as long as they feel like you're taking care of them, or as long as they believe in you, that's fine. Whether we know what we're saying to the clients or not as a fact, it's completely different. It sounds like we do a lot of research, and we know a lot of people on Wall Street. We really don't. We are programmed to say things. There are brokers that will pick up a phone, tap into your line, and feed another broker lines. I don't know if you've ever seen that or heard of that, but let's say a junior broker, or a guy that's 6 months into the business, is on a phone with an angry client, or he needs help raising money, whatever it is. A senior broker, somebody who's seasoned as a salesman, 5, 6, 7 years, will pick up a phone, a third phone. He'll be muted, you won't hear him, but he's going to listen to the client. He's going to listen to the objection of the client, or whatever it is, and he will tell the broker what to say. Say this, 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 and this. As the words are coming out of the senior broker's mouth, junior broker says the exact same thing into the phone, using as much of the same emotion and enthusiasm as possible, which makes the client buy. 2 against 1. 2 professionals against 1 client who thinks that he's talking to somebody who's extremely knowledgeable at handling his money. So that happens too.
Whether or not that's the case.
Whether or not that's the case, it's a whole different ballgame. I mean, listen, I've been around brokers for a while. A lot of them are great leaders. They mean well. They're great businessmen. They have great families, and they really care about some things. But brokerage business is brokerage business. You have to do this because it works. People don't buy ABC Corporation because it's at a great value and it will steadily give you an income or whatever it is. No, you have to create that emotion. It's a salesman. Salesmen do it. Guys that are quiet on the phone never make a sale, never make a dime. That's why they become analysts, or they go to UBS to get $50,000 a year. All right, that's not most brokers.
Okay. And how do you choose the investments that you typically recommend for your clients?
How do we choose them? It's like an actor reading a script, or a director. You're looking for a captivating story. You're not looking for amazing cash flow, or increased value, or anything that fundamentally is sound or technically. You're looking for something where you can paint the best picture over the phone. Something where you can get excited about every day. You have to come in, and there are different investments for prospects, and there are different investments for clients. A client trusts you more, so you don't really have to know the company whatsoever. Okay? You just have to hear something on the news, ABC Corporation. Ooh, I have an idea. This might work. So you get the client on the phone, you give him 3 bullets of why you think it's going to work. Client trusts you, he buys. Easy. Easy set. A prospect, a person that hasn't done business with you before, a little harder. You have to have a captivating story. It has to be something exciting, something the prospect hasn't heard before. You have to stand out, you have to be unique, because your prospect, your multi-million-dollar whale, here's brokers pitching him stock every single day. You have to be different. Okay? Even a retired couple has to be motivating. They have to act now, today. If it's an unmotivating story, yeah, listen, I might buy it in a month, I might buy it in a year or two. No, you don't care, you're not motivated. A story grasps a person. Like you basically hijack a person to come into your store and you sell them things, and they have to buy now. So it's all about the story. That's how we pick stock. We go through stories. ABC Corporation, okay, this is a fun story, but XYZ Corporation, this is a story. Small company, okay, so they're in debt and they're losing money. They're not in a growing industry or anything, but the story, amazing. Let's get on the phone, let's get excited, come on. First guy that opens 3 accounts, whatever, we'll get you a present. Whatever. That's how it works, right?
And do you prefer to recommend individual securities, or do you also recommend pooled investment vehicles such as mutual funds and ETFs?
Definitely individual securities, and if it's an ETF, a leveraged ETF. Something that moves more. Mutual funds, as far as I know, don't really move all that much. Sure, some do, but for a broker to pick a mutual fund, I'm waiting for that miracle. A stock, one stock, you can always come up with a reason to buy it. You can always come up with a reason to sell it. It's very easy to come up with a reason to sell stock. Just give the client more negative things than positive things. That's it. A mutual fund that has 200 companies, if one company goes bankrupt or has bad news or whatever, it doesn't really affect the mutual fund that much at all. Maybe 1.5% of that mutual fund is going to be that stock. Maybe sometimes even less. So there's not enough reason for you to exit the position and charge commission. Okay, and a mutual fund, you can just sit in a mutual fund for years. As long as it's managed well, it'll do perfectly fine. Okay, a leveraged ETF or a stock, it can move, it can go up, 5, 6, 10%, 50% a day. That's what you're looking for. You're looking for exit points. You know what I mean? You don't want to buy a person something, have it go up 2%, and then charge 4% on the way out. It doesn't look good. So you want something that goes up 7%, you charge them 3, 4% to sell it, and then you charge another 2% to buy something else. Hope that goes up because you really don't know if it will or not. That's basically it.
I hope you enjoyed this part of the interview. Stay tuned for the next part for more valuable insights into the brokerage industry.